Imagine waking up one morning in medieval Europe and realizing that kings, popes, merchants, and even entire cities all owe money to one single family, not an empire, not a nation, a family. And if that family decides to close its books, economies don't slow down. They collapse. This is not a story about swords or armies. This is the story of a banking family whose financial decisions quietly broke medieval Europe from the inside out. To understand how one family gained that kind of power, you have to forget everything modern movies taught you about medieval wealth. Gold wasn't what ruled Europe, control did. And the Medici family learned earlier than anyone else that if you controlled money flows, you controlled everything else. In the early 1300s, Europe was fragile. Trade was growing, but money was dangerous to move. Carrying gold across borders meant robbery, loss, or death. Kings needed loans for wars, merchants needed credit to trade. The church needed funds to operate across continents, but no system existed that everyone trusted. This gap is where the Medici stepped in. They didn't start rich, they started smart. Instead of hoarding gold, they built trust. Instead of lending recklessly, they built networks. Medici banks appeared in Florence, then Rome, Venice, Geneva, London, and Bruges. Each branch wasn't just a building. It was a node in a private financial web stretching across Europe. Their real weapon wasn't money, it was accounting. The Medici perfected double-entry bookkeeping, allowing them to see profits and losses with clarity no ruler had ever seen. While kings guessed, the Medici calculated. While monarchs reacted, the Medici planned. Soon, Europe's most powerful institutions became dependent on Medici credit. The Catholic Church, the largest organization on earth at the time, chose the Medici as its primary bankers. That single decision shifted the balance of power. Church taxes from across Europe flowed through Medici ledgers. Papal debts piled up quietly. And the Medici gained something far more valuable than gold: leverage. Here's where the danger began. Once rulers realized they could borrow without immediate consequences, they borrowed more. Wars became easier to start. Spending became reckless. Kings delayed repayment because the Medici always extended credit. Entire governments began running on borrowed money they never intended to fully repay. The Medici didn't just enable this system, they normalized it. By the mid-1400s, medieval Europe was financially addicted. Trade depended on Medici letters of credit. Royal courts depended on Medici loans. Even rival banking families depended on Medici clearing systems. If the Medici slowed lending, markets froze. If they tightened terms, governments panicked. And then the cracks appeared. The first problem was political risk. Kings don't like being reminded they owe money. When monarchs failed to repay, the Medici had no armies to enforce contracts. They relied on reputation and diplomacy. But when England's King Edward IV defaulted on massive loans, it sent shockwaves through Medici accounts. That money was never coming back. At the same time, branches began competing with each other. Local managers took risky bets to show profits. Corruption crept in. Loans were extended based on politics, not logic. The very system that made the Medici powerful also made them fragile. Then came the silent killer. Concentration risk. Too much Medici wealth was tied to too few powerful borrowers. When one kingdom failed, losses cascaded across the network. When trade slowed, credit seized up. When confidence disappeared, so did deposits. By the late 1400s, the Medici Bank began collapsing branch by branch. London failed, Bruges failed, Geneva failed. Each closure rippled outward, starving local economies of credit overnight. Merchants couldn't trade. Governments couldn't pay soldiers. Cities froze economically. This wasn't just a banking failure, it was a continental shock. Florence itself descended into chaos. Riots erupted. Political enemies of the Medici seized the moment. The same family that once financed popes was suddenly exiled from its own city. Their private banking empire was gone. But the damage was already done. Medieval Europe had learned the wrong lesson from the Medici era. Rulers believed credit was infinite. That debt had no long-term cost. That someone else would always absorb the risk. This belief didn't die with the Medici Bank. It spread. Later banking dynasties copied the model. States borrowed more aggressively. Financial bubbles formed faster. When collapses came, they were bigger and more destructive. The Medici didn't just break medieval Europe financially, they rewired how power and money interacted forever. And here's the uncomfortable truth. The Medici didn't fail because they were greedy. They failed because they became too essential. When one private family becomes the backbone of an entire economic system, collapse becomes inevitable, not dramatic, not explosive, silent. If this story feels familiar, it should. Modern economies still run on concentrated financial power. Banks are still considered too important to fail. Governments still borrow more than they can repay. And when these systems break, ordinary people pay the price first. This is why understanding these forgotten collapses matters. If you're watching Silent Collapse, you're not here for entertainment. You're here to understand patterns history keeps repeating. If you want more stories about hidden financial decisions that shape the world without a single battle being fought, make sure you stay connected to this channel. Because empires don't usually fall from invasion, they fall from ledgers. And the next collapse is never as new as people think, and what makes the Medici story even more dangerous is what happened after their fall. Europe didn't step back and rethink the system, it leaned into it. Once rulers experienced the convenience of large-scale credit, there was no going back. Monarchs began designing entire states around borrowed money. Taxes were pledged years in advance, future trade revenues were already spent. Governments slowly transformed from owners of wealth into managers of debt. The Medici collapse taught Europe how powerful banking could be, but it failed to teach Europe how fragile it was. In the decades that followed, financial fear spread quietly. Merchants became cautious, credit tightened, small businesses vanished. The average citizen didn't know why food prices rose or wages fell. They only knew life was getting harder. And once again, no army marched, no city burned. The damage was invisible. This invisible damage is the most dangerous kind. Because when financial systems collapse silently, people blame the wrong things. They blame immigrants. They blame religion. They blame neighboring kingdoms. Rarely do they blame debt structures they don't understand. And that misunderstanding gave birth to something even more powerful than banking families. Centralized state finance. Kings realized they could replace private bankers by becoming bankers themselves. National treasuries expanded. State-controlled debt replaced family-controlled debt. But the behavior stayed the same. Borrow more. Delay repayment. Hope growth fixes everything. The Medici were gone, but their financial blueprint survived. Even today, modern banking language still echoes medieval Florence. Letters of credit became bank transfers. Ledger trust became digital trust. Risk concentration never disappeared. It just became harder to see. This is why the Medici story matters far beyond medieval Europe. It proves that financial power doesn't need violence to dominate civilizations. It only needs dependency. Once an economy depends on a single system, breaking that system breaks everything attached to it, and history shows this pattern again and again. The names change, the technology evolves, but the collapse is always quiet at first. So the real question isn't how the Medici Bank failed. The real question is how many systems today are one default away from doing the same. If this video made you see history differently, then Silent Collapse is exactly where you belong. This channel exists to expose the quiet decisions that shape empires long before they fall. Because by the time collapse becomes loud, it's already too late.